Imagine spending 4 years, or even more, earning a professional degree. You attend lectures, take exams, complete assignments, and accumulate thousands of dollars in student debt. You graduate believing you've secured your future. Society congratulates you. Family members celebrate. You frame your degree and hang it proudly on the wall. But what if I told you that the very thing you worked so hard to obtain is rapidly losing its economic advantage? What if the traditional pathway to financial success is being disrupted by a completely different system? A system built not on credentials, but on capital. A system where people are growing wealth through micro-investing networks, digital assets, peer-driven investment communities, and algorithmic financial tools. And what if the wealth gap of the future isn't between educated and uneducated people, but between those who understand capital allocation and those who only understand employment? Let's talk about it.
The degree was designed for a different world.
For decades, professional degrees were considered the golden ticket. The formula was simple: go to school, get good grades, earn a degree, get a stable job, work for 40 years, retire comfortably. The problem is that this formula was created for an industrial economy. Employers needed specialized workers. Universities became talent factories. Degrees acted as filters. But the economy has changed faster than the education system. Technology moves at internet speed. Universities move at bureaucratic speed. Many graduates enter the workforce carrying knowledge that was already becoming outdated before they even graduated. And that's creating a massive mismatch between education and wealth creation.
The real asset isn't knowledge anymore. That statement sounds controversial. After all, knowledge is important. But information is no longer scarce. You can learn coding, marketing, investing, design, business strategy, and countless other skills online. Some of the most valuable business lessons in the world are available through books, podcasts, courses, and communities for a fraction of university tuition. The advantage is no longer simply possessing information. The advantage is knowing how to deploy capital effectively. The highest earners aren't always the smartest people in the room. They're often the people who own assets. Assets generate income whether you're working or not. A salary requires your time. Assets can scale independently of your time. And that changes everything.
The rise of micro-investing networks. A decade ago, investing felt exclusive. You needed large amounts of money. You needed connections. You needed access. Today, things are different. Someone can begin investing with surprisingly small amounts of capital. They can join investment communities. They can access market research. They can learn from experienced investors. They can participate in opportunities that were once reserved for institutions. Technology has dramatically lowered barriers to entry. As a result, a growing number of people are discovering that small investments, compounded consistently over time, can outperform the financial growth produced by many traditional careers. The key word here is compounded. Most people focus on earning. Wealthy people focus on compounding. Those are not the same thing.
The silent crisis nobody talks about. Here's the uncomfortable reality. Many professionals are trapped. They earn decent salaries. They have respectable careers. But they are financially dependent on their next paycheck. Their lifestyle grows alongside their income. Their debt grows alongside their lifestyle. And despite earning more than previous generations, many struggle to build significant wealth. Meanwhile, another group is emerging. These individuals focus aggressively on ownership. They acquire assets. They build investment portfolios. They participate in capital networks. They think less like employees and more like investors. The difference isn't always visible at first, but over 5, 10, or 20 years, the gap becomes enormous. One person exchanges time for money. The other uses money to generate more money. Why prestige can become a liability. Prestige feels valuable. Humans naturally seek status. A prestigious degree can create pride, recognition, and social validation. But prestige becomes dangerous when it prevents adaptation. Many people continue defending outdated systems because they invested heavily in them. Economists call this the sunk cost fallacy. It's the tendency to continue investing in something simply because you've already invested so much. The world doesn't care how much effort went into an old model. The market rewards what creates value today. If someone spends years protecting a professional identity instead of learning new wealth-building skills, they may unknowingly limit their financial growth. Adaptability is becoming more valuable than credentials. The algorithmic investor advantage. Another major shift is happening. Artificial intelligence, automation, advanced analytics, algorithmic investing tools. Individuals now have access to financial technologies that were once available only to hedge funds and major institutions. This doesn't guarantee success. Investing always carries risk. But it does mean ordinary people have access to sophisticated information and decision-making tools. The investor of the future may not be sitting in a Wall Street office. They may be sitting at home with a laptop, understanding data, analyzing opportunities, participating in global markets. The playing field is changing, and many people don't realize how quickly it's happening. Does this mean degrees are worthless? Absolutely not. Let's be clear. Society still needs doctors, engineers, scientists, lawyers, healthcare professionals. Professional education remains valuable. The issue is not education itself. The issue is believing that education alone guarantees wealth. A degree may help you earn income, but income alone does not create financial freedom. Financial freedom usually comes from ownership, investment, and compounding. The most successful individuals often combine professional expertise with financial intelligence. They don't choose one or the other. They leverage both. The new framework for financial sovereignty. Instead of asking, "What degree should I get?" a more powerful question might be, "How can I build assets while developing valuable skills?" This mindset changes everything. You begin viewing your income as fuel for investments. You start learning about capital allocation. You understand risk management. You study cash flow. You think long-term. Most importantly, you stop relying on a single source of income. Because dependence creates vulnerability. Ownership creates options. And options create freedom. The future belongs to adaptable people. The future isn't rewarding people simply because they followed the traditional path. The future rewards those who adapt, those who learn continuously, those who understand technology, those who understand capital, those who embrace change instead of resisting it. The professional degree is no longer the finish line. It's simply one tool among many. The real question is what you do after acquiring it. Do you stop learning, or do you evolve? Because the world is entering an era where financial intelligence may become just as important as professional expertise. Final thoughts. Your degree is not your enemy, but it should not be your entire strategy. The economy is changing, technology is changing, wealth creation is changing. And the people who thrive in the coming decade will likely be those who combine knowledge, adaptability, and ownership. The biggest risk today isn't failing to get a degree. The biggest risk is believing that a degree alone is enough. The future belongs to those who understand how to make money work for them, not just how to work for money. So ask yourself, are you building a career or are you building wealth? Because in the years ahead, that distinction may determine your entire financial future.